exporters. The goals of international trade are best served when the mutual interests of exporters and importers are clearly defined in documents. In an international trade transaction, you may negotiate excellent terms and perform an outstanding deal, but if you haven't been paid, you've lost. That's why setting up the right terms of trade, a crucial part of your experts. When negotiating the terms of payment, you always face a dilemma. If you insist on more secured payment terms, you may very well reduce your sake opportunities. If you agree on more flexible payment terms, you run a high risk of payment being delayed or refused. If you approximately select and arrange the payment terms, you can significantly minimize risk involved with payment on trade. The sales contract, a contract of sale, sales contract, sales order, or contract for sale is a legal contract for the purchase of assets by a buyer from a seller for an agreed upon value in money, an obvious ancient practice of exchange. In many common law jurisdiction, it is now governed by statutory law, see commercial law. International Chamber of Commerce. The ICC fosters international trade and commerce to promote and protect open market for goods and services and the free flow of capital. The ICC performs the three primary activities: the establishment of rules, dispute resolution, and policy advocacy. The ICC has established universal shipping terms known as Incoterms to enhance the understanding between parties to international trade transactions. Among the most common of these terms is free on board. Financing foreign trade shipments. Commercial letter of credit. The trade cycle begins with the agreement to trade. When partners agree to trade, merchandise is exchanged for payment. In the international marketplace, the exporter goals are to be assured of payment and to free capital invested in the merchandise during shipping. For the importer, the guarantee of delivery of merchandise and the ability to defer payment are for paramount concern. A sales contract should be written to cover a term for sale. The arrangement for payment, however, relies to a great degree on the relationship between the trading partners. The letter of credit is a trade finance tool issued by a bank at the request of an importer. It guarantees payment to the exporter provided that he satisfied the condition in the letter of credit. In like manner as the buyer applies for LC or letter of credit, it is essential that one must be absolutely sure that the letter of credit was prepared correctly and there is no legitimate ground for refusal of payment under the letter of credit. Thus, the letter of credit must enclose the following information to it. Number 1, the applicant's name and address. Number 2, the beneficiary's name and address. Number 3, issuing bank detail. Number 4, advising bank detail. Number 5, form and type of credit. Number 6, issue date. Number 7, expiry date. Number 8, the latest date of shipment. And number 9, the expiry date of presentation of documents. And number 10, the amount payable under the letter of credit. Number 11, currency of payment. Number 12, port of loading. Number 13, port of discharge. Number 14, term of delivery. Number 15, indication of the payment of the freight. Number 16, allowance for the partial shipment of transshipment if needed. Number 17, the type of payment availability. Number 18, list of documents required for payment. And number 19, accountability for bank charges. The document of international trade. The documents related to the movement of merchandise around the world provide the support and foundation for international trade when the time arrives for an exporter to seek payment for merchandise sold. His receipt of payment will often rely not on the actual shipment but on the supporting document. In order for payment to be made under documentary collection or letter of credit methods, it is critical that the appropriate documentation be properly prepared and presented by the exporter. The parties to the letter of credit should negotiate properly which documents are to be included before the letter of credit is to be issued. Note that there is distinction between the document you have to present under the letter of credit and the documents you have to supply according for the sales contract. It is therefore not necessary to mention all the documents required the contract in the letter of contract. Most likely, the letter of contract transaction requires a presentation of a commercial invoice, a transport document, and an insurance policy. The list of additional documents depends on the agreement made between you and the buyer. Usually, the buyer will include documents needed for the custom clearance. The list may include the following: certificate of origin, certificate of quality, weight certificate, pre-shipment inspection certificate, packing declaration, packing list, or fermentation certificate, and so on. Commercial documents, transport document, insurance document, official document, and the draft.
Payment alternative in international trade. One of the principal factors in which the exporter and importer must agree when finalizing the terms of sales contract is the method of payment. Basically, there are four options of payment exists. Second, open account. In open account method, the importer is trusted to pay the exporter after receipt of goods. The main drawback of open account method is the exporter assume all the risk while the importer get the advantage over the delayed use of company cash resources and also not responsible for the risk associated with goods. Third, documentary collection. In this method of payment, the exporter draw a draft or bill exchange directly on the importer and present it with required shipping document to his bank. The remitting bank, which they forward to another bank, the collecting bank in the country of the exporter for the collection. Fourth, letter of credit. A letter of credit is a bank's commitment to an exporter to honor drafts and documents presented in conformance with stated terms and conditions. Types of letter of credit. A revocable letter of credit can be cancelled without the consent of the exporter, while the irrevocable letter of credit cannot be cancelled or amended without the consent of all parties including the exporter. Letter of credit payment methods. The letter of credit will specify the manner in which payment is to be made, as well as when payment is available to the exporter. The availability of payment to the exporter will be specified in the tenor of the letter of credit. The tenor of letter of credit may be payment at the site or payment at specified future date. Letter of credit adaptation. Adaptation to the basic letter of credit can address specially consideration, rendering it again the most flexible and most advantageous payment method available in international trade. Among the special letters of credit available in the revolving letter of credits, in which the bank with the qualification as to time and value agrees to regularly restate the credit without the need to amend the original letter of credits. Applying for a letter of credit. Once the importer and exporter have agreed to a sales contract which provide for payment by a letter of credit, the next step must be taken by the importer. He asks him back to issue a letter of credit naming their exporter as beneficiary. He will be required to complete a letter of credit application and sign an agreement which contain the terms of condition of issuing a bank. The role of the bank. In an international trade transaction, the bank plays the role of either the issuing, advising, negotiating, or confirming bank for the purpose of collecting bills exchange, payment, or settling the accounts of two trading customer, importer or exporter of the banks agreed upon to their prior sales or purchase contract. The bank's role in issuing the letter of credit is serious undertaking. When requested to issue a letter of credit, the bank will rely on the financial stability of the importer.
Conditions of the issuing bank. Before it agrees to issue a letter of credit, the importer's bank will require the importer to acknowledge and accept certain conditions. The importer signifies his agreement to these conditions by signing the letter of credit agreement. On top of all other conditions, and for the services to be rendered by the bank, the importer agrees to pay a signified fee as well as out-of-pocket expenses. The importer's instructions. The information presented in the letter of credit application serves as instruction to the bank. A well-seasoned international banker may at times assist the importer in completing the letter of credit application. The importer, however, must have a clear understanding of the requirements of this contractual agreement. The manner in which the letter of credit is to be advised, either by mail or by telecommunication, must also be indicated. The issuance of a letter of credit. If, after review of the importer's application, the bank agrees to issue a letter of credit, the exporter will be so advised. The issuing bank will contact another bank, known as advising bank, which is usually located in the country of exporter, to have the letter of credit advised or advised and confirmed. Responsibilities of the exporter. The exporter, therefore, must see to it that the other set of documents in the draft mailed to them by issuing bank must have 100% similar to the documents mailed to the bank's international counter. Otherwise, the exporter or beneficiary of the export letter of credit cannot collect the proceeds of the export transaction. Before the letter of credit is issued, a letter of credit must mirror a number of points stated in the contract. It will avoid delay and misunderstanding if these points are clarified in the contract. These details include the amount and currency of payment, the duration of the credit, the terms of delivery of merchandise, the documentation which will be required in the assignment of letter of credit cost. This cost will be covered in detail in the subsequent section. Payment requisites and procedures. The exporter's best assurance of payment is his careful analysis of his ability to ensure shipment of the merchandise and to comply with the terms of and conditions of the letter of credit. Any iota of doubt on the part of his paying bank as regards any claim of the export procedures will stall the payment thereof.
Shipping the merchandise. Once a letter of credit has been issued by the importer's bank and reviewed by the exporter, the merchandise can be shipped. Again, it is important for the exporter to make sure he can comply with the terms of the letter of credit regarding shipment at this point. It will only delay payment if he discovers he has not complied fully when he submits his documentation for payment. If he is satisfied that the terms of the letter of the credit agreed with the contract, the exporter will deliver the merchandise to with the courier. Both the sales contract and the letter of credit should stipulate the manner in which the merchandise is to be packed, as well as any necessary markings which are to be included. Presentation of the documents. Having shipped the merchandise, the exporter should compare the documentation to the following checklist before submitting it to the bank. These are the credit checklists. Are all required documents included? Will the documents be presented with the expiration date of the letter of the credit? Are the documents on their face consistent with each other? Has the shipment been made prior to the last shipping date? Are the documents stamped typically unless otherwise specified documents presented 21 days or more than the date of the transfer considered stamp? Are the required number of copies of each document being submitted? Are the documents where signatures are required? Are the appropriate signatures present? Is the transport document consigned to the correct party? Is the notified party on the transport document correct? Is the merchandise description correct? Are the number of units, the unit price, and the total price are all consistent? If the insurance document is required, is it the type and amount of coverage correct? Was it effect prior to the shipment? If partial shipment has been made, is it permitted under the terms of the letter of credits? If the transshipment is necessary, does the letter of credit permit this? Review the draft. Does it quote the bank's letter of credit reference? Is it wrong? The role of advertising and confirming bank. The exporter may choose to present the necessary documents and draft to his bank, the advertising bank, or the advertising and confirming bank in his country. Upon its review of the documents, the bank will pay the exporter and forward the documents to the issuing bank for payment. As a negotiating bank, the bank negotiates the letter of credit with a recourse to the exporter. However, when the negotiates or adding the bank's confirmation, the bank must mindful of the obligation it assumed. This is it are agreed to pay, accept, or negotiate the letter of credit without the recourse upon acceptance of the document when the bank adds its confirmation. It is guaranteeing the payment will made upon presentation of the document as required by the letter of credit. Adding the bank's confirmation transfers the risk of payment from country of the issuing bank to the country of the exporter. In cases where the letter of credit was paid by the confirming bank, the bank will obtain reimbursement from the issuing bank or sometimes through a third bank authorized by issuing bank to do so. This bank is called the reimbursing bank. The role of reimbursing bank. The issuing bank may authorize another bank, the reimbursing bank, to provide reimbursement on its behalf for drawing under the letter of credit. This bank will provide payment to which paying, accepting, or negotiating bank is entitled. This situation may occur when a bank issue a letter of credit in favor of a beneficiary located in a country where no corresponding bank accounts or relationship exists. The issuing bank will authorize the paying bank located in the exporter's country the reimbursement for another bank. Today, banks are increasingly directly all letter of credits payment to one corresponding bank or select number of corresponding banks to eliminate the need for maintaining large balance of numerous financial institutions. Although the reimbursing bank is authorized to act on behalf of the issuing bank, the responsibility for payment of the draft remains with the issuing bank. Documents the issuing bank with no intervention by the reimbursing bank. The reimbursing bank is not liable for payment or the draft or any loss of interest to the beneficiary which may result from reimbursing bank refusal to pay at first demand. Is settlement. When issuing bank has reviewed the documents, it will typically make payments and simultaneously debit the account of the importer. Upon receipt of payment from the importer or extension of the credit to him by the bank, the documents are released to him. The importer will make arrangement with the custom broker for the formal entry of the payment or duty of his merchandise. If applicable, the bank is relieved of its liability under the letter of credit once payment is made. If, however, the importer is unable to pay the bank can take possession of the merchandise if it holds the bills of lading in negotiable form. It is for the reason that the bank may specify as a condition of letter of credit the documents be issued in negotiable form. Next is discrepancies in documentation. Additional fees may be assumed by the bank on the discrepant documents to cover additional processing time. If the documents cannot be corrected, the exporter may also risk shipping merchandises for which the importer will not agree to accept or pay. These costs, coupled with incidental fees such as interest due on financing provided prior to the payment and telecommunication fees, can seriously affect the importer's profit margin.
Letter of credit costs. Typically, the charges assessed by the issuing bank associated with the letter of credit are borne by the importer, and the costs assessed by the advising and confirming, or negotiating bank are paid by the exporter, unless otherwise specified by the letter of credit. Among these charges are the commission assessed by the issuing bank for issuing of the letters of credit, and an advising charge representing transmission of the credit of the exporter that will be assessed by the advising bank. In this case, a confirmed letter of credit, a commission is discharged quarterly for the transfer of the credit risk of the exporter's country. A fee will be incurred for the amendments of the original language in the letter of credit. A charge will be also incurred for discrepancies in documents that has been presented. When a credit is negotiated or paid, a payment commission will be assessed for examining the documentation and marking payment. An acceptance of a deferred payment commission will be charged for the duration of the financing period of any time drafts associated with the letter of credit. Discounting an acceptance will also result in additional interest expenses. Other incidental costs may be incurred for transmittals of telecommunication messages, courier services, and postage if no correspondent bank account relationship exists and the reimbursing bank is designated. The reimbursing bank will also assess the charge of providing reimbursement. Bills of exchange, bank drafts, or trade acceptances. These are kinds of negotiable instruments usually issued by commercial banks evidencing money claims by an exporter and pay beneficiary of the credit instrument from the importer or payer drawer of the credit instrument, or some kind of credit instrument to guarantee payment to trade transactions between two trading parties, whether such transactions arises from the domestic or international trade. Import bills purchase. One type of bank transaction in an international bank operations of a commercial bank opening an import letter of credit in favor of an account party, importer whose letter of credit is denominated in foreign currency, usually in US dollars. If the importer has no available FX amount during the letter of credit opening, he may ask the bank to convert his peso funding of aforesaid letter of credit as the indicated FX amount in the letter of credit application as per agreement between the parties in the sales contract plus bank charges. Export bills purchase, or reciprocal bank transaction in an international banking operations of a commercial bank negotiating an export letter of credit in favor of a beneficiary exporter whose letter of credit is denominated in foreign currency, usually in US dollars. If the exporter has no FCDU account, FX currency deposit, he may ask the negotiating bank to convert his FX proceeds into peso and credit at the same of the peso account of the export beneficiary, or pay him outright cash equivalent of the FX proceeds less bank charges. Open account, a method of payment for merchandise by which the importer is required to pay only after receipt of the merchandise. Under the BSP rule of importation, if the value of the merchandise is below $1,000, the importation is exempted from opening of the letter of credit in any authorized agent bank in the country. Thus, the importer may send the payment via bank remittance facilities or any other remittance mode. For credit of the seller's account abroad, Once credited, the seller may withdraw the amount from this account, that which completes the trade transaction.
Prepaid arrangement, a method of payment for merchandise by which the importer is required to pay in advance before the receipt or the actual delivery of the goods. Say for an instance, a buyer from the Philippines ordered a computer spare parts from the US that is worth $950. Under the BSP rule on importation, CB Circular 1341 and 1389, if the value of the merchandise is below to $1,000, the importation is exempted from the opening of the letter of credit in any authorized agent bank in the country. Thus, the importer may send the payment in advance via bank, remittance facility, or any other remittance mode. The seller may receive the payment personally or through the authorized representative, either in cash or in draft. The document against payment or the draft against payment is a term of payment in international trade that relies on an instrument generally used in international trade called a bill of exchange or a draft. In this term, the documents under consignment are delivered to buyer or the importer only after collecting payment of goods by buyer's bank. The draft against acceptance utilize a term or time draft. In this case, the documents required to take possession of the goods are released by the clearing bank only after the buyer accepts a time draft drawn upon him. In essence, this is deferred payment or credit arrangement. The buyer's assent is referred to as a trade acceptance. This is a documentary collection method by which the exporter relinquish documentation related to the sale of merchandise based on the importer's promise to pay at a specified future date, or a draft endorsed or acknowledged by a bank on which it is drawn, or otherwise called document against acceptance. A trust receipt is a financial document attended by a bank and a business that has received delivery of goods but cannot pay for the purchase until after the inventory is sold. It is a notice where a bank allows the buyer to take possession of the merchandise but the ownership title of the merchandise rests with the bank. Under this arrangement, the bank provides the buyer with a short-term import loan to pay for the goods imported under the letter of credit. International current accounts. It refers to the funds in foreign currencies which is accepted and held by an offshore banking unit or OBU of a foreign bank in the regular course of its business, with the obligation to return the equivalent amount of the owner thereof with or without interest. On the other hand, large local commercial banks or authorized agent banks by the Bangko Sentral ng Pilipinas may also market the opening of the foreign currency deposit unit.